Welcome to Kitco News. We are live with trader extraordinaire Gareth Soloway. He is the chief market strategist at InTheMoneyStocks.com. Those of you watching the show who have been following our work might not be any stranger at all to Gareth's work. He has been featured many times on the show before. He has made many important, influential calls that have helped many people here on Kitco, including shorting Tesla, starting from the start of the year, making the call that gold will trail sideways to downwards for the first half of the year, and of course, most recently calling Bitcoin to land at $30,000. We're going to be talking about all these trades and more. Gareth, welcome to our first live event together. People want to know what's going to the moon. But first, no, don't give that away right now. But we're going to talk about your market overview. 2 weeks ago, we had you on the show. You were talking about a fast correction downward for the S&P 500, down 10%, as much as 10%, you said. Hasn't happened yet, Gareth. Are you still sticking to that call?
So yes, it hasn't happened yet. That is correct. It looked like it was going to kick off about a week and a half ago with the markets breaking a key trend line, but it looked like light volume really saved the day in that front. And first of all, David, thank you so much for having me on as the first inaugural guest here on your live show. Super fun, super exciting, and live is great because it's all bare bones here. So
I just want to add to our audience watching right now, as you're tuning in, please submit your questions in the chat column on the right-hand side of our YouTube section. You are welcome to submit any questions, concerns. We will be monitoring and asking your questions throughout the interview, and we'll have a dedicated Q&A section after our presentation, but we'll be asking questions as they come along as well. Thank you very much, Gareth, for being here today. Yes, please continue with your thoughts on the markets.
Yeah, so I think the key is we're still watching for a confirmed breakdown from that recent move to the upside. If we take a look at the SPY chart, you can see that the trend lines that are continuing to converge, we broke below right here, and that got me excited. I said, okay, listen, I've been kind of inching into shorts on the S&P, on the NASDAQ, and so forth, and ultimately it teased me and then pushed right back up into that channel. So what I'm looking for is a close below and what I call confirmation, which is a secondary move to the downside following that close below. And that'll really set it apart from just a kind of a tease where you know that it's not a game by institutions. And institutions are all out there. They've got these algorithms that continually kind of try to lure investors on one side of the market or the other. We saw it recently with Bitcoin. Bitcoin broke 30,000, teased everyone it was going to collapse, and then the institutional players just ripped it right back up after taking out a lot of stops. So I'm still in the camp that we will see a corrective move. I don't know if it'll come before July 4th, since the volume today was record low for the year. I mean, we had the lightest volume of the year on the SPY today, and usually going into a July 4th holiday weekend, we'll see lighter and lighter. The one caveat is the jobs report on Friday, which I'm sure we'll touch base on in a minute.
Okay. Now, going back to this chart that we have here on the screen, Gareth, whenever we have a move downwards under the support line, could that not be interpreted as a very bullish signal? Could that not mean, Gareth, that traders are oversold to the downside?
So usually when you get a break of a trend line, what I often watch for is the reaction the next day. So sometimes, like for instance, in this case, we saw a close below a trend line, which again got me excited. I said, okay, could this be it? And then the next day they floated it up. One of the things I watch for here is the volume that they're taking it back up on. And you can see here the volume was heavy on the breakdown, and then right away it lightened up. And that tells me that there's not institutional buying there. So whenever you see heavy volume in a market, it's usually, basically if you have John Smith or John Q. Public, they don't have the money to create massive volume in a market. So when you see big volume, you can usually interpret it as being institutional based versus light volume. So while the markets did rebound here, it to me looks like the institutional sellers just backed away, and they let the small investor continue to accumulate long on the S&P 500.
The economists I've spoken to on this subject have agreed, or some of them have agreed, that it's unlikely we're going to get a major market correction until the Federal Reserve raises interest rates, which they're not planning to do this year. Potentially next year, but some even dispute that. So what do you think? Do you think we'll have a continuous bull rally all the way till 2022 and beyond?
No, I don't think we'll have a continuous bull rally. Number one, you're seeing complacency now back to levels where the VIX is now at 15. You're getting to levels where, you look at these complacency signals where people just get too normalized to, oh, the markets are going to grind up every day. And that's usually once people start thinking that way, that's where you'll see some sort of reactionary move to the downside. Something will surprise essentially to create that, whether it's the jobs report, whether it's Fed chatter. We'll have to watch. But I'm in the camp that the Fed will actually, so the Fed can kind of raise interest rates without raising interest rates, right? So if the Fed just comes out and says, oh, inflation's a little higher than we expect, what does the 10-year do? It jumps up in anticipation. So the Fed will start to raise interest rates by doing things like chatter, also maybe tapering their bond buying, and those will be the first initial signals. I think that happens by end of year, where they'll really start talking it up to raise those interest rates back up. I'd be somewhat surprised, and I'll go on record. I think you'll hit 2% on the 10-year by year end this year.
Wow. Okay, 2% on the 10-year by year end. And if I were an equities investor, Gareth, I were to ask you, Gareth, I want to know when or what signals I need to be looking out for before we hit that 10% correction that you mentioned. What are some news stories that you possibly could, that you think could possibly move the markets beside the Federal Reserve?
Well, one thing I'm watching for sure is Friday's jobs report. So we've seen slightly weaker than expected jobs reports, the last two reports, and that's kind of put the market at ease because the Fed has this dual mandate, which is employment, right? Partially employment. So I think that you're going to see the employment numbers get much stronger here. We've seen a lot of states get rid of those extra benefits, which has forced a lot of people back into the work environment, the working place. And I also think that we are seeing those benefits come to a close in August and September from the federal government, and you're going to see these numbers grow dramatically. So you're going to see that pressure, the employment side of things get very, very heated. And I think that will start to push interest rates up. I'm actually looking for a potential pop on yields as early as Friday.
We've got a few questions, well, actually not a few, quite a few questions coming in already, so let's address them as we go along. Some of them are my questions as well. Of course, if you're watching this right now, let your friends and family know that this event is happening right now. Get everybody participating. We want as many questions as possible. Whatever you want to ask Gareth, this is your chance to do it. Gareth, first question we have from the audience, Tesla. You've been shorting Tesla. Why are you still shorting Tesla? Are you continuing to short Tesla, or have you stopped out of your position? What's this stock?
No, so I'm still short Tesla, no doubt about it. And again, my thesis continues to be that you're in an environment where there's so much competition coming online. And I want to be clear. I think I've told you before that I'm on the wait list for a Cybertruck. I have nothing against Elon Musk. He's a genius. He's an amazing individual. He's created an amazing company. His space exploration is so exciting. But I just am a technical trader. I work on valuation. I work on looking at the other factors out there. And one thing on the Tesla chart here, and we'll get into the fundamental side here, but take a look at this trend line and look at where this currently is. Let me just bring up this. So look at what you've retraced to just recently. So you could arguably say on a technical basis that Tesla broke down here, and then it's been floating sideways to up, and it retraced into that level. And that on a technical basis is known as just plain old-fashioned a retrace to the scene of the crime or resistance. And that to me tells me that as long as Tesla stays below this level, you could see it reverse back down. Obviously, support short-term is going to be this low. If it breaks that low, you're going to see a resumption of a head and shoulders breakdown. So again, it's not the prettiest of the head and shoulders, but you can see shoulder, head, shoulder, breakdown, retrace up, and then generally, and again, technicals work on probabilities, which mean that they're never perfect, but you work on the fact that it's more than 50%. The more than 50% basis would tell you that the downside will come. And again, just going back to the factors of competition, we know Ford, GM. I mean, there's so many companies out there that are going to flood the market with EVs over the next 5 years that it's hard to imagine unless Tesla goes into overdrive in their other businesses that Tesla can hold on to its market share.
Let's just talk about the fundamentals of Tesla. I know bottom-up stock picking isn't exactly what you do, but it just seems to me that when I go on the internet and look at car ads, all I see are ads for electric vehicles from everybody. It just seems like Tesla is getting slammed by competition from every single corner of the street. Do you think they could survive this onslaught of this, let's call it the EV revolution? Do you think they could? Yeah.
Yeah, so Tesla will survive. I mean, Tesla's a great company. They make a great vehicle. The question is, can they continue to be number one by such a wide margin? And just like David, I mean, anytime you get more and more competitors, even if the competitors don't take all of your excess, they're going to nibble at it, and that's going to create a harder environment for Tesla. Ultimately, they're going to have to spend more money to advertise, to fight the competition. And then also, one thing that people overlook is that the EV credits that Tesla has been selling, which is really the only reason they've turned profits in their past many quarters, those will be going away. Now, EV credits, just to understand, basically Tesla only makes electric vehicles. The government says that every car company has to have a certain basis of electric vehicles. So what a company like GM has been doing, because they don't sell a lot of EVs, they buy those credits from Tesla, paying Tesla for them. Now, as those EV credits aren't needed by a GM and a Ford anymore, Tesla won't have anyone necessarily to sell those to, and they'll make less money in that respect either. So again, nothing to take away from Tesla, amazing company. To me, just the valuation is hard to grasp at this point.
Okay. Does that apply to the tech sector in general, what you just said?
Oh, wow. In this market environment where the money is virtually free from the Federal Reserve, where there's just so much printing and there's been so much stimulus, that's why you have PE ratios where they are. The idea is that if the Fed has to tighten, if the Fed ever does tighten, which I think they're going to be forced to do at some point, those PE ratios will have to come in. We've kind of seen it with yields, right? When yields started to push up to 1.75 on the 10-year, we did see the tech sector with those crazy PEs sell off quite a bit. So the idea, again, is that as the money gets tightened, those PE multiples will have to come in.
I'm getting a lot of questions now about other asset classes: gold, Bitcoin, Ethereum, cryptocurrencies, altcoins, miners. We're going to go over all of them. Don't worry, folks. Starting with stocks first. We're going to finish off with stocks, and then we'll move on to another asset class. People want to know what you're doing with AMC and meme stocks. Gareth, let's pull up an AMC. Let's pull up a chart.
Let's take a look. So AMC ended down a little bit on the day. I'm sure people remember that I was short last time I was on here a couple weeks ago. I continue to be short. Honestly, it hasn't gone anywhere since I shorted it. You can see the price action here has just been sideways. Now, the reason why, in my opinion, so we saw Fast and Furious 9 come out over the weekend. AMC came out and said, hey, we had an awesome, record, or not a record, but for the pandemic period, a record showing at the box office. So you did see it pop yesterday. Today, it gave back some of that gain. The one thing you want to keep an eye on here, too, is that the reason this is supported, you can see the 20 moving averages under price. For those of you that are watching this, if price gets below this 20 moving average and closes, let's say a daily close, then AMC is very vulnerable to further downside. And again, I think everyone kind of, you have two camps, people that are super into AMC and potentially, the changes and the meme players. And then for me, I'm in the other camp that's saying, the valuation, while AMC is an awesome brand, it's just hard for my head to get around the crazy valuation here, where it's, one of the biggest companies. It is the biggest company in the Russell at this point, and so forth.
As an investor, suppose I were to ask you now, judging from an investor's perspective, suppose this squeeze never happened. Suppose AMC was never a meme stock in 2021, so to speak. If you were to choose between AMC and Netflix, what would you go with?
Oh, that's so Netflix for sure. I would have to be in the camp of Netflix, because Netflix, again, has a business that will survive, the streaming wars, right? They're right at the forefront there. Netflix has actually had a recent run up to the upside. I still think it has more short-term upside to this gap fill right here. But yeah, I would definitely go with the Netflix. Netflix proven with the streaming side of things. And AMC, again, isn't a streaming service right now. I don't think that they could be, because most of the streaming, like the movies that are coming out are going to Disney first, or at the same time as going to AMC. So I'd be in the Netflix camp here in terms of investing.
This one's a good question, which ties back into the overvalued sector that you discussed earlier. The question is, could you discuss on investment strategy for diversifying family wealth considering the current overvalued markets? The question, of course, assumes that markets are overvalued. I'll let you discuss that. And of course, if you agree with the notion that it is overvalued, what would you do? Fair question.
Yeah, great question. So I think the thing is you have to just continue to stay diversified. And this is going on the assumption that you have, a certain amount of wealth. Well, let's just call it a million or even $100,000. You'd never want to put all your money in the stock market on the long side. You'd never want to go all short. You'd never be all in on Bitcoin. Those were mistakes I made early in my career where I would get so hyped up about some asset, right? And I'd go all in. And you know what would happen? I get my butt handed to me over and over again. And ultimately, as my net worth grew, I said, listen, I can't risk that. It's too much money. So you got to diversify. So having said that, I think the metals, gold and silver, and some of these other metals you want to be involved with. But again, keep that to 10% of your investment. It's hard for me to say go long Bitcoin here because even though I do believe in the long-term story of Bitcoin, I do think there's another leg lower first. But same thing goes with stocks. There are opportunities in stocks, right? So last time I was on, I was talking about Chinese stocks, how I liked some of them. I liked Viacom, right? Yeah. So even though I'm net short the S&P and the NASDAQ, I have certain stocks here that I really like. Like you can see just over the last week and a half, 2 weeks since I was on, you've had Baidu rally up from $184 to 207 here. You've had Alibaba, which are best of breed Chinese names. I mean, look at this move to the upside here. Beautiful move. And even Viacom, you can see it had a nice push up, even though it pulled back today. So the key is that, keep yourself diversified. There's a certain amount of stocks you can find that have gotten crushed already. Those to me are safer because if a market did correct, I think they wouldn't be hit as hard. And then I think you diversify with being short a little bit in certain areas, gold, silver. And again, if crypto corrects, you've got to have crypto as part of your portfolio as well.
Let me ask you this, asset allocation. Suppose I had $10,000, nice round number. I know it's different. I chose $10,000 because it's different if you have 100,000 versus a million. Let's just go with $10,000 as an amount that most retail investors might want to put in the markets today. How would you diversify that? How would you break it down? Stocks, cryptos, bonds, gold, precious metals. Can you give us a rough breakdown?
Right. So first of all, just make sure, you're following your own risk tolerance, right? So there are certain people that are older towards retirement. You want to be obviously safer with those investments. If you're somewhere my age, I'm 40 years old, what you want to do is you probably keep about 50% in stocks, and that could be long or short, obviously choosing and swing trading the right stocks. And then I'd look to do at the right opportunity, at least 10% in crypto, 10% in gold or silver. And then that leaves you about 30% to play around with. Keep 10% in cash at all times because you never know when a good opportunity will come up. And then I'd look to, just spread the others around, whether it's in bonds or in other things. Sometimes you can do some currency pairs, you can do some other things out there as well that'll be good opportunities. But I think 50% in the market, the stock market, and then diversify out in other things. I mean, again, you can look at commodities like oil maybe. Okay. I like oil on the short side personally at this point, but definitely those would be the allocation area that for me at my age that I'm looking to do.
Let's move on to gold now. We've got a number of questions about gold, but before we do, we've got almost 3,000 people watching this live incredible event. Guys, awesome. Why don't we ask the audience first, before we move on to another asset class, what are you invested in? How are you diversifying your portfolio? What is your asset allocation? I think it's a good way to just poll 3,000 people watching right now. We're going to get a very good set of data to analyze later. We'll come back to that in the comments later. Gareth, let's talk about gold. Can we fall below $1,700 again?
So the answer is yes in the short term, right? I mean, we're not that far away at this point. I think last time I was on, we had just started to fall off a cliff here on the GLD, and I was just starting to accumulate. So I've got about 4% of my swing trade portfolio in gold right now. I'd like to get it up as high as 10%. So again, the way I operate, folks, and this is just a quick little lesson, is that I never, and this is something I learned from my early career too, right? So in the early days, I would say, oh, this is the best entry level ever. I'm going to go all in, buy whatever I want to buy, go all in. And I'd lose half the time. I mean, it's just, you have to be humble enough to understand that the markets are superior and they'll do whatever they want, whenever they want. So the way I do it is I leg in, where I put in, in this case, 2% was my first buy. My next buy was another 2% of my portfolio, and I'll look to accumulate that. So long-term, gold is kind of one of those no-brainer investments to me. It's looking at the facts, right? You have the Federal Reserve printing. You have the government spending. The inflation, whether it's going to be transitory in the short run or not, is going to continue and likely at a higher pace than the Federal Reserve will want, whether it's 3% or 4%. You want to have that diversification out of the dollars, at least with a portion of your portfolio. So the bottom line is look to continue to accumulate gold. Like my next buy level on the GLD is around 163. There's a gap fill, and you can see this pivot right here. Let me zoom in. So pivot here, that's support, then a nice little gap fill right before the breakout. That would be another add level. And then here would be another point. And then basically I'd even add more down here. So that's where I'm at in terms of my investments on gold. I continue to look to accumulate. I have some GDX. I have some Newmont mining in my portfolio at these levels. And I still think that at some point you're going to see a reversal and gold should hit 20, possibly 2,100 by year end.
Okay, 2,100 by year end. Somebody asked 2,500 by year end. Is that possible for you?
Anything is possible, but
probable. Is it probable? That's probable.
Probably not. Probably
okay.
not. I don't think you're going to see enough fear and panic and inflationary pressure to drive it to that before year end. But I do think in 2022 you will see 2,500, maybe even higher.
Okay. What are some of the variables that affect gold the most? You just mentioned panic and inflation. What else? And what do you mean by that, by the way? What do you mean by panic?
Well, so let's be clear. When you get an all-out panic like during COVID, you saw gold initially sell off, right? But then before you knew it, it rebounded and made new highs. So there are going to be periods in this market, and this is what I think will drive Bitcoin to 20,000 or sub 20,000, will be that period of deleveraging. There's so much leverage in the market where people are margined to the hilt. Look at the Archegos Capital. This hedge fund trader was like leveraging 100 times. That's just an example of what's going on in the general market with leverage right now. So there will be a point where fear strikes again. I don't know the catalyst for it, but there will be a point where you have a taper tantrum where the markets drop 20% really quickly or something like that. It could be China. It could be the Delta variant becoming, the vaccine doesn't work against it. Who knows? Yeah. But when that happens, you'll see gold initially sell off, and then people will say, okay, let's rotate into gold, and that's where you'll see that move to the upside.
Chris Clark has a question for Gareth. He said, are we going to have inflation or deflation coming?
Good question. So we've seen that yields have started to pull back, right? And after the Fed, so the Fed came out hawkishly a couple weeks ago. Yields initially rallied, and then the Fed started to walk back their hike talk, and yields came right back in. And that's caused a lot of people to start to say, wait a minute, this is unusual. Why are yields falling? And people started to talk about deflation again. It's hard for me to see a scenario where deflation does occur because of the insane leverage in the system and the printing of money. The Fed has shown that if you do see any sort of deflationary pressure, they're just going to print more money. And so it would be hard pressed for me to figure out a scenario where you see deflation hitting the system.
What about this scenario? And this ties into the next question. Jose Sanchez asks, how will the new COVID variants impact the markets? How concerned is Gareth? That's a potentially deflationary event if people go back inside and don't go out again?
That is true. That is true. Although the one thing I will say, it seems like the government officials are much more hesitant to create a new lockdown, especially here in the U.S. We did that for a while. We know what happened to the economy. I don't think the economy, nor can governments, do the stimulus needed again for that to happen. So I don't think people will be pushed back inside. That would be the first thing. Yes, the Delta variant is a concern. I know portions of Australia are going back into lockdown, but it seems like the U.S. is pretty much on this, vaccinated move where they are going to stay open. So I don't expect it to have a major impact, at least in the U.S.
We have several questions about uranium miners, so we'll touch on uranium in just a bit. But first, let's delve a little bit deeper into the drivers of gold. Of course, we are at 3.3 thousand live participants right now. Don't forget to spread the word. Invite your friends to participate. This is a great event. We're just getting started. Gareth, what about the dollar? People have asked you about the dollar in our chat. Where do you see the DXY headed in the near term?
So at least on the short-term chart of the UUP, which is the ETF I follow, it looks like we have a bullish flag consolidation pattern here. So you might see short-term upside on the dollar, which could explain maybe, we'll have to watch what that jobs data on Friday, but that could be the catalyst for some upside there. So let's keep an eye on that. And I certainly think that in the short term, the dollar looks bullish. Longer term, again, I still think the dollar has to trade lower considering the printing of money.
It has to trade lower longer term. Okay, so that should be a boost for gold, right? It should be a tailwind.
Absolutely, absolutely. One of my key theses for why gold will continue up over the longer term.
What about the scenario in which the Federal Reserve raises rates down the line? Would that provide some sort of a boost to the dollar?
So it's a possibility, right? So the big thing I'm dealing with in terms of analyzing that is what's the culprit, right? Is the Fed raising rates because the economy is strong? In which case, I think that helps the dollar. It potentially puts pressure on gold. Or is it because of inflation pressures that are getting away from the Federal Reserve? If they're forced to because of inflation pressures, then I think, again, it will be a positive for gold versus a negative. With the dollar, it's a little bit more skewed. I still ultimately think that the dollar will continue lower in the longer term, even if it has a short-term pop here.
We have a few questions about Basel III in regards to gold. Topical subject. So have you done a little bit of research about Basel III and its impacts or potential impacts in the gold market?
I've done a little bit, and I know everyone's worried about the impact. I don't see it being a huge impact at this point, but I could be wrong. Right now, for me, again, as a technical trader, I focus solely on the charts, and then I kind of hear the background noise, and I say, okay, is this something that would make me get nervous about my position? And then I go reevaluate. And if I still am not super nervous about that position, then I say, okay, I'm going to continue until proven otherwise. And the great thing about the charts is that charts are very black and white. There's no kind of middle ground. It's like it's a breakout or it's a breakdown or it's not. If it breaks down, if let's say gold breaks through a key level, then I would have to say, okay, what in my thesis is not correct here? And I have to go reevaluate at that point.
Okay. And just on inflation before we move on, suppose you're right, we do have inflation. We do have inflation persist rather than deflation. Do you think inflation is going to be transitory? That's one of the questions that came in.
Yeah, I mean, that's what the Fed wants us to believe. This is where I see it going, is that you've had this massive surge in inflation. We see lumber prices and copper prices and so many prices out there have just surged because of the reopening, and there have been bottlenecks because of the COVID shutdown. You're not going to see inflation at the 8% or crazy levels that we have seen it here. There's going to be a moderation. That is going to make the Fed claim victory on being transitory. I think that is wrong. I think that you're going to be at a new normal for inflation going forward where you're not going to ever get back to 2%. I think maybe 3 to 4% is going to be the new norm. But watch the Fed try to claim victory when inflation comes down from 8% or 6% back to 4%. They'll say, oh, it's transitory. See, look what's happening. And then, in my opinion, it will never get back to 2%.
So the goalpost just got moved to the right. Is basically what you're saying.
That's what the Fed does. I mean, let's be honest. The Fed is king of doing that. They always just say, "Oh well, we're going to still do this," and it just never seems to end, in my opinion.
If only we could do that in real life. Hey, no, I don't think I'm going to pay for this for $50. I think I'll only pay $10. That's just what I feel like doing.
And that's the Fed. The Fed just continues to kind of I don't know if the Fed ever discusses like long-term consequences of things, but it just seems like they're so focused on the short term, and they're like, oh well, tomorrow's problem is tomorrow's problem. I'll leave that to the next Fed chair. I don't know what they think about, but you got to wonder what kind of trouble we're laying for future generations.
Here's an interesting question that just came in. Suppose the dollar devalues over the next couple of years, and to the extent that it becomes more or less a problem. Suppose it happens. Do you think we could ever return to a gold standard?
I don't think the government will ever let it happen because they just don't have enough gold to back the dollar, right? So I mean, it would be hard pressed to do that at this point. But I think that's where cryptocurrency comes in. That's where things like Bitcoin, where you have a definitive maximum 21 million Bitcoins that can be mined. That's where you're going to see people start rotating. And the writing's on the wall. I mean, other countries already starting to try to push against the reserve currency being the dollar. And just think, when the U.S. is no longer the reserve currency, think about the dollar being dumped on the open market from all these countries that hold trillions of dollars because it's the reserve currency. I mean, it's It's not a pretty sight. The government, I don't think our politicians ever think about this stuff because they're concerned with is getting reelected after 4 years or whatever. But at some point, China's going to try to take over this, and they're already starting pumping the digital yuan. They want the digital yuan to be the reserve currency. That's why they're clamping down on Bitcoin, because they don't want the competition against the digital yuan of Bitcoin.
What about gold miners, Gareth? Are you following gold miners?
Yeah, for sure. So I'm a fan of gold miners down here. They've really broken down significantly. I have a couple levels I'm following. One was here, and we broke just below that here on the GDX. There's another level right here, which we closed right on. You can see we opened below it and kind of came back. But just like with gold, I'm starting to accumulate down in this range on the GDX. Newmont Mining I like. If you look at Newmont's still holding on to the 200 moving average here. I mean, these are all stocks, and the GDX obviously is an ETF that they've been discounted too quickly. So you have a short-term opportunity here, in my opinion, a short-term opportunity to go long for just a bounce. But then I think if you're someone who wants to hold for a longer, bigger move to the upside, this is also a great opportunity to start investing.
Wait a minute, Gareth. This chart that you're showing, can you go back to the GDX chart for a minute?
Yep, absolutely.
Now, correct me if I'm wrong, but it looks like it's broken down below the trend line. Now, earlier when we talked about the S&P 500, you noted that this might be a bearish trend. Can the same be applied to gold stocks?
Yeah, so on the GDX, right, one of the things to keep in mind is that this low here to this high, that's your major move. So you have major moves and minor moves when it comes to technical analysis. Your major move is always the biggest, and it's the most vertical. What you've seen here go on with the GDX, in my opinion, is really starting to create a wedge or channel. Look at how these lines are parallel, right? So even if we get rid of these short-term moving average or moving averages and trend lines, and let me get rid of those, look at the beauty of this chart. Here's your mega move up, and then here's your sideways consolidation. To me, that is a bullish consolidation. So again, to me, it's just buy on dips here. I mean, maybe it goes all the way down here, but the longer pattern is very, very bullish for a breakout, as it's a bullish pattern of consolidation.
Before we move on to cryptos, let's touch on silver. Let's pull up a silver chart.
Yes,
silver has also been trading sideways. Unlike gold, as we know, silver never retraced its upside long-term historical high. So we're still waiting for silver to break out to $50, Gareth. When's that going to happen?
My guess is it'll either be later this year or early next year. I still think you have some choppy consolidation here. This high on the SLV chart, at least right here and here. I mean, this was the Reddit attempted squeeze. That obviously did not work out because the silver market's just huge in terms of market cap. But at some point when you get through this level, that's going to be your leg for a major move higher. The general rule is the longer something consolidates, the bigger the move up when it does break out. So this is a long period of consolidation. Whenever it does break to the upside and takes out this level here, look for a significant move up on silver. Short term, I'm not long silver as a swing trade while I am long gold, but I am eyeing silver at some key levels. This trend line would be one, and then you have pivot points on the way down where I would consider to accumulate a little bit more.
And just to play devil's advocate now, Gareth, you said that a consolidation means that the chart is preparing for a big move upward. Why can't it move downward?
So it certainly can. There's always, and I think this is something that a lot of people don't understand, is that, like I mentioned earlier, charts are all about probability. So when you get consolidations after a big move up where it stays in the upper, what I like to call the upper 50% of the move. So if you take this low here to this recent high, you can see all the sideways action has been in the upper 50% of that move. And just historically, if you look at charts like this, the probabilities tell us that eventually these charts are going to break out. From a psychological standpoint, silver had this massive move up, and then there's been a lot of people that have said, okay, let me take some money off the table, and it created sellers. What you like to see and why this is bullish is that it wasn't like there were only sellers. It's not like the silver chart went all the way back to the lows. There was a little selling and then buying pressure, and then selling and then buying pressure. And the buying pressure is telling you that there's accumulation going on. Even though there's sellers, there's still accumulation. And that's why the stock, or in this case, the ETF, has held near the highs.
Which do you think has better upside potential, gold or silver? Let's just stick to this year.
This year, wow.
Let's start with this year and we can branch out.
This year, I personally am long gold this year as of now. It doesn't mean I won't buy silver if it dips a little bit lower, but I am long gold. For me, it's a safer trade. The silver trade is just a little bit more hazy to me because of the industrial side. I do expect kind of a bubble later in the year because the reopening trade is going to be so massive, and we've seen silver do its thing. I just worry a little bit that if demand for silver on the industrial side weakens a little bit later, it may not perform as well. Gold to me is just one of those things that, again, just look for that upside to continue, and it kind of be the safer trade for upside. So I would say gold this year. Eventually, silver will outperform gold because it just always historically has made bigger moves.
This is a good question for miners. Now, Olivier Beaulieu asked, are margins for gold miners going to stay good? Is the price of gas going to have an influence? Could gold miners diverge from the gold price? Three-part question there, so let's break it down. Margins for gold miners. Positive, negative?
I think positive. I think they'll continue to stay positive for the miners. I think that, again, miners in general, if you're looking for a bigger bang for the buck with more risk, miners is where you want to be. Generally, when you see gold go up 1 or 2%, the miners usually go up 4 or 5%. So certainly, at least in terms of investing, if you're a real hardcore believer, the miners would be the place. If you had to choose between gold or the miners, you'd want to go with the miners if you're a believer in the gold trade. There is more risk to it, though, obviously.
But suppose we have an inflationary environment. The second part of the question leads into that. Suppose we have inflation. Wouldn't gas go up? Wouldn't raw commodities go up? Wouldn't input costs for miners go up? Wouldn't that shrink their margins, Gareth?
Yes. So if you do see that inflation spike dramatically, I agree. So I'm kind of, and this is where it gets a little bit more hazy for me in terms of inflation, right? So my biggest concern is that you're going to see inflation, but you're also going to see an economy that stalls out and goes back to a lower growth rate of like 2% or 1% on GDP. And my concern there, and why I think the miners may still be a good place to bet, is that oil, if the economy starts to get some slack and slows, oil could actually see a drop even while inflation is strong. If that's the case, at least from that side, the miners may save some money on the energy side.
We had a comment from Ryan Lyle. Oil this summer will crash the market, in my opinion. Okay. Can respond to that, Gareth?
Wow. So I have a hard time figuring it out, right? So if you go back to last year, we had an oil price that actually in a very short amount of time went negative. I think we had down $40 a barrel at one point. It did cause the market some fear, but it didn't have the same impact that it would have years ago when the oil industry was so dominant in the S&P and the Dow. So I think that any sort of crash in oil will have an impact. I would be hard-pressed to think that would be the only situation where the markets would crash. Now, if oil is crashing, right, it's probably telling us that there's some economic issue there. That could be the culprit for a bigger market correction, though.
We promised the audience we talk about uranium, so let's do that now. Uranium has been a tricky commodity for the last couple of years. Let's take a look at the price. Uranium miners, of course, are one of the ways to play it, so we'll talk about miners as well.
Yeah. So I'm trying to pick up, do you guys have any specific symbols you want to look at on the uranium side?
Symbols. Why don't we just take a company as a proxy? So let's do like UEC, for example. We can start with a company.
All right. So this stock has had a decent run up. First thing that I'm seeing is that
I'm getting tickers in, by the way. UUU or other ones, URNM. But anyway, we can start with this.
All right, yeah, we'll start with this one. So I think uranium, just like with other commodity trades, is a place you want to be. The chart has broken down here. It's trying to hold this support right here. It looks to me like it closed just below today, below this 250 or right at 250 level. For me, I would be very interested if it could somehow pull back to this 155 area. I don't know if it will pull back that low. Ultimately, what I would do and what I would recommend for people, and obviously make sure it's within your purview of risk tolerance, is buy a little on the way down. So you have a pivot low here at $2.30. There's another little pivot area right here at just below $2. And I would just slowly accumulate with your eyes on a potential downside of $1.50. So again, long term, I love uranium. Short term, it looks like, at least in this stock, there might be a little short term weakness.
Let's take a look at Cameco real quick. It's one of the largest uranium miners in the world. CCJ is the ticker.
Okay. Let's take a look at that. So this had a drop off the recent highs. Then you had a little inside bar bearish pattern, and it's starting to break down as well a little bit. So for me, it would be a no touch at this point. I wouldn't go short it. It definitely, I'm not comfortable being short these plays because I think ultimately they're going to go higher. But at least in the near term, I would not be long, or at least I'd wait to accumulate. First level I'm seeing in terms of major support would be somewhere just below 16, maybe 15.50 to $16 right in here. Lots of support right there. Longer term, if we zoom out, there's even more support right around this level here, which is right around 13. I don't know if it'll go as low as 13, okay, but I think it probably gets down to about 16 or a little bit below 16.
We're going to move on to cryptocurrencies now in the last segment of our conversation. To those watching right now, thank you for staying this long. Invite all your crypto friends and hodlers, so to speak, to watch this last part of the segment. We're going to be talking about altcoins, Bitcoin, and Gareth's trading strategies for cryptos. First question came in from a gentleman by the name of Larry White earlier in the interview. He says, should I diversify 100% into Dogecoin?
Well, for the definition, if I don't know if you're saying you're 100% in Dogecoin or you're looking to put all your money in Dogecoin, but the answer is I wouldn't put more than 10% in Dogecoin. And to be honest, I don't own any Dogecoin. I wish I did when it was a penny or two and went up to 75 cents. But again, think about what's your thesis for Dogecoin, right? Always have an investment thesis behind everything you do. For me, Bitcoin is, I love the fact that it's an alternative to the dollar. And by that, I mean, Bitcoin can't be printed forever, right? There's a stated maximum run. So those are the types of things I look for, why I like to be in Bitcoin. Dogecoin, again, remember, I believe there's 10,000 new Dogecoins printed every single minute. So just while we've been doing this, there's literally 100,000 plus being printed of Dogecoin. So I would stay away from Dogecoin. Again, it's not to say it can't pop 50%. I mean, it's crazy. Elon Musk tweets one thing about it, it will. But in terms of if you really want to protect your assets, be very careful.
Here's a question from earlier in our conversation. When will Bitcoin drop to 20 to 24K? Still hasn't happened yet. I was hoping to buy at these prices. Aren't we all?
Yeah.
Aren't we all?
Yes. And just like the viewer, I'm waiting patiently for it as well. So if we look at the Bitcoin chart, right? So what we clearly see is that you have this support area right here. This was a previous support going back to January of this year. We then had the big run to 65,000, and then it's traded down to 30,000 again. The more you hammer on this 30,000 level, the weaker it gets. But it hasn't gotten there. It hasn't broken yet. Every time I do these interviews, I always talk to people and I say, listen, once it breaks 30,000, it's a lock to go to probably about 20,000, maybe even a little bit below. But in the near term, it could trade up as high, and I've said this on record, and I continue to say this, is that it could trade up as high as this 50,000 level. The reason I have that level penciled in as a potential upside maximum, and by the way, that's a maximum, so 50,000-ish, give or take, would be my max upside, is because it's a gap fill and it's a retrace to the head and shoulder neckline. So earlier on in this broadcast, we were talking about that very a chart that was very similar that had retraced to the neckline. It was the Tesla, right? So Tesla's doing exactly what you could argue Bitcoin may do. So if you look at Bitcoin, right, it came down to this support here, it held, and then it's basically traded sideways to up. Now, ultimately, this is a bearish retrace to this resistance level. And with Bitcoin, let me bring that chart back up. With Bitcoin, that's the same thing that could happen. It would still be bearish to me. Now, again, I always like to say, longer term, 100,000, 500,000, it's going there. But again, as if you're a hodler, don't worry about these interim moves. Just, don't even look at your Bitcoin. Put it away. Look at it once a year type thing, and you'll be fine. For those of us that are more on the looking to accumulate side or swing trade side, again, I would be buying down around 20,000 or so.
Okay, so you're still waiting for a pullback to 20,000. But Gareth, what about the upside? Why haven't we broken broken to the upside above $40,000, for example? We haven't had Elon Musk scaring us with his tweets for quite some time. So what's holding us back?
So I think you just have a situation where, I mean, really this correction started where the questions got raised about energy efficiency and how much energy is being used to mine Bitcoin. We saw Elon Musk pull back on Bitcoin just a little bit over that, saying that he would resume, being super nutty about Bitcoin once they did start mining it with more renewables. Now, I know a lot of renewables are being used, but the corporate side, right? We haven't really seen new companies announcing positions in Bitcoin. And I think really the energy side and how much energy is used is why. So what you need to do is you need to see this kind of chop finish out. I do think, again, short term, you could trade up a little bit higher, maybe even as high, like I said, 48 to 50,000. But the bigger move to the upside is going to happen when you get more renewables involved here to really make corporate America feel better about buying Bitcoin. Then it's all in, and then that's where you go to 100,000 and 500,000. Once you get, one of the things that many people have asked me is, and I haven't done this calculation, but I'd be fascinated, is if every pension fund, every 401k, if all these funds had 5% of their holdings in Bitcoin or Ether, what would the price be potentially on those cryptocurrencies? And it is a huge upside potential there. And I think it's going to get there. I think we'll see more inflation. You're going to see more and more people get nervous about what the government has done and what the Federal Reserve has done. And they're going to look for alternatives just like I am.
Alternatives, okay? CBDC, central bank digital currencies. This is a question that came in earlier too. Can CBDCs destroy or kill the competition for Bitcoin? And that ties perfectly into what you just said, alternative assets to hold in the treasury. Why hold Bitcoin when you can hold CBDCs, Fed coin, Chinese yuan coin, whatever the case may be?
That's a really good question, and the answer is super simple, is right. So would you trust a Federal Reserve coin? I mean, the Fed can print them at what's the difference really between the dollar and a Federal Reserve cryptocurrency, right? Why can't the Fed just print $1 trillion whenever they want? I want something where I know that there can only be a stated run of X amount. And that's where something like Bitcoin comes in. I don't trust the Federal Reserve. I don't trust the government. I don't trust central banks around the world. Even with China, I mean, China wants the digital yuan to be the new reserve currency, but they still can print as much as they want, and they don't even have to be, open about it, right? I mean, they could just say, "Hey, this is what it is," but do we really know that's what it is?
So, if you were the CFO of a company, you would say no to FedCoin, to adding that to your balance sheet.
Well, I think as a CEO, you have to kind of kiss butt essentially to the Federal Reserve, so you probably wouldn't just say no, but you would you would call it diversification, right? Where you'd have maybe a little of theirs on just to say, hey, listen, I'll go with you guys, but then you'd also hold some other cryptocurrencies.
What are your thoughts on volume? Just going back to the chart here, Harris and Shapiro, we aren't seeing the volume yet to send BTC bullish, are we?
No, you're not seeing the volume for sure. There's kind of this period now where you've flushed out some weak hands in Bitcoin, but you're also not seeing the buyers being willing to step up just yet. So people are still nervous. I mean, there's still a lot of chatter about further downside. In all fairness, before the next downside move, I think you're going to need to see a move more bullish on sentiment. Sentiment is actually something I use quite a bit in my trading. RSI is a great way to track that in terms of sentiment. When things get really overbought, there's usually a very key bullish sentiment to it. But yeah, so for me, that's really why the volumes are light here. People are just kind of scared. They're not ready to step in and put money to work in Bitcoin just yet.
What do you think is going to happen to cryptocurrencies as a form of payment? I'm not singling out Bitcoin. I'm leaving it open to your interpretation. The space as a whole, can we see more adoption from just the regular everyday folks to use whatever coin they choose to buy their coffee, to the groceries, pay their rent potentially? We've already seen houses in Miami being bought with Bitcoin. What's next, Gareth?
Yeah, so I'm not a big fan of thinking it's going to be a future currency. Like, I don't foresee myself, going to Starbucks and buying a coffee with Bitcoin.
Unless you live in El Salvador, then maybe you could.
That's right. I mean, there's going to be certain countries where that is, but even in certain countries like Venezuela and stuff, people are buying Bitcoin, but then I believe to do transactions, they're converting it back or selling it back to, they're just basically saving themselves from massive inflation in these countries by buying Bitcoin and kind of, holding it while the inflation takes hold in the currency. But yeah, I think for me, it's a digital gold. It's a place where I put my money and I just kind of let it sit there and be comfortable knowing that let the Fed do what they want, let whatever governments do what they want. I can always convert it back when I need some money to buy something, and I'll get a great exchange rate at that point.
What is your favorite cryptocurrency right now?
Do I have to pick one? Can I have Ether and Bitcoin as my two favorites?
Sure.
All right.
You can pick as many as you like. Yeah.
I'm just maybe it's been trading for so long, trading through the .coms and so forth. I remember the .coms. I was invested in some of the .coms that went belly up back then, and the ones I should have been in were Amazon and a couple of these other ones, and I would have made an absolute fortune over just by holding it for the last 20 plus years. So I'm kind of in that same camp.
I try not to think that way, because otherwise I wouldn't fall asleep at night. Too many things I should have bought, maybe I didn't. Anyway,
right.
I try not to.
I think it's the idea of just being with the best of breed, right? I mean, there's a reason Bitcoin and Ether are the best of breed. Doesn't mean you can't speculate. I mean, there's nothing wrong with speculating. I speculate on small caps all the time, but when you're talking about a majority of your money in crypto, you probably want to stick with the best of breed, the ones that the big boys are buying, the hedge funds, the Elon Musks, the Michael Saylors, all those people. If they're into it, they know in general more than me, and I'll go with that.
This is an interesting question from Willakey. Do you expect Ethereum to become more dominant than BTC? He used the word dominant. I'm not really. I'll let you interpret what that means. It could be.
I assume in terms of dominant, probably
market cap
used more widely.
Okay,
I do think it's already used in many ways more widely. The question dominant could also mean market cap. Does it overtake the market cap of Bitcoin? That's a good question. Right now, I don't see that happening, but it is something that I honestly have to be open to as a possibility, and that's one of the reasons why I think it's smart to diversify. Now for me, my biggest holding is still going to be Bitcoin, but certainly a close second would be Ether, and I think that protects me against that possibility.
Yolan Sholan, in your opinion, do privacy-focused cryptocurrencies have upside? I had a guest on not too long ago, actually a couple days ago, and we had a conversation about privacy tokens. His view is that things like Monero, Zdash, they're going to be banned by the government outright because of their inherent ability to hide the provenance of the transactions. And so, the government will stop these coins from being used to fund terrorism. And so his fund that manages cryptocurrencies, he doesn't touch those altogether because he believes somewhere down the line they're just going to be made illegal. What's your view on privacy coins?
So I think at some point as the government catches up, and the government's obviously been behind the curve on crypto, just like they always are on most things, at some point they will have to evaluate what it's being predominantly used for. And I do think that's a risk that as an investor you have to pay attention to. I don't foresee Bitcoin being banned ever by the US government because, again, as a store of safety, just like gold, I think it's an alternative. If it displaced the dollar, that could be a bigger issue for the government, but I don't see that happening. But certainly, I do think there's a risk that, if these cryptocurrencies are being used for a majority of shadier things, then that is a problem for them, and the government will likely crack down.
Okay. Great. We've touched on pretty much all the major asset classes now. We've got 10-15 minutes left in our conversation. Of course, I won't rush you. The folks watching right now are still submitting questions, so we'll take them as they come in. I want to spend a little bit of time as we sift through some of these questions. I want to spend a little bit of time talking about your trading strategies, because I know you're also an educator. You have, on inthemoneystocks.com, you have a service that trains people to trade, and you're very generous with your strategies and your tips and advice that way. So let's talk about that a little bit. I want to start off by talking about a personal story of how I used to trade when I was younger, and then you can tell me why this is a stupid strategy. All right, so full disclosure, I lost all my money when I was in my early 20s, so I didn't do this ever again, but this is what happened. I took a couple $1,000s and I just traded options. So I took the biggest named companies that I could think of, Apple, Microsoft, mostly just tech companies, things that were relatively volatile that I knew, and I just all I did was trade call options. I didn't even bother with puts. So 9:30, as soon as it moves up, I would just press buy, and I'll just sit there and wait. I'll just look at the screen and wait until it just ticks back up. Even if it's up like 2 cents, I would sell immediately. So I realized very soon that was a very dumb strategy, and I lost a lot of money just on commissions. So I bring that up because a lot of people are still doing that today. What is wrong in your view with that strategy?
So first of all, you're not alone. Don't feel bad. People out there, we all have to make our own mistakes and learn from them. It's the people that learn from them that obviously will succeed. It sounds like you learned from it and you stopped doing it. So the issue with that is that in general, upticking, if you're just going to sell after a couple ticks, you're getting that profit. But the question is, did you really keep yourself, like when it downticked too, did you exit the trade immediately? Like that's the question, right? Because in general, if you're equaling the sell side right away, then it's going to work out. But the problem is if you take two ticks on 3 trades, and then you lose 20 ticks, that's where the strategy falls apart. To be honest, I mean, I'll just be straight with you guys. Like I've done ridiculously stupid things. I remember there was a long time ago where I traded the ES, right? The ES futures. And I was like, oh, this is in the addiction years where I always wanted to be in a trade, which is a very common thing. And I would literally buy like a contract or two at nighttime and be like, all right, well, I'll just put out a sell order at, 2 points, two points higher. And for a couple nights, I'd wake up the next morning. Oh, look, I made, $50 or $100 on it. And then, of course, one night, the markets dropped like 20 points and I lost like $1,000. And it's like, all right, well, I tried it. It didn't work. But don't feel bad, David, because it's something that we all do. We all try to game the system. We all try to figure out the loophole, and it doesn't usually work.
Okay, we're gonna continue with that discussion in just a bit. Eisen Van wrote in all caps several times, "Real estate?" ? I want to come back to TA, but this guy really wants to know about real estate. Let's talk about real estate.
Let's talk about it. All right, so this is an important one. Now, by no means am I advocating this for everyone, but I am moving. We're moving my family, right? So I have decided to move. I'm going to migrate back to Florida, which is where I was about 5 years ago, and I am selling my house here, and I decided to rent when we get there for at least a year and wait for housing prices to come in. I looked at houses out there. I looked at stuff on the beach. The prices are insane right now. I would much rather, pay the rent. And the rents aren't cheap either, but at least you don't have all the housing issues. You don't have to pay real estate taxes, all that stuff that comes along with a home. So if that speaks to what I'm doing, I literally am going to move my family into an apartment. And we're going to rent for a year or two. And then when things pull back, which I do anticipate they will, then we'll be looking at a house.
You wouldn't buy REITs?
A lot of them have rallied a huge amount right now, and it just makes me very nervous. Everyone's just assuming everything's going back to perfect and being even better than it was. And the prices are just too insane right now for me.
All right, I want to go back to the technical analysis and your trading strategies, and we'll wrap up there. Thank you all for watching and tuning in and staying this far. If you have any questions on how to trade, how to invest right now, write them in the comment section. This is your last chance. Of course, we'll be doing more of these interactive sessions with Gareth in the future. This has been a lot of fun, Gareth. This has been a lot of fun for me. Okay, so back to your strategies. You were telling me about why going in and out isn't really your style. How do you pick entry levels? How do you pick exit points?
All about the charts, right? So it's one thing if you're jumping in. I do day trades, so we have trades in our chat room, in our live day trading room, where we're in and out in a minute or two or a couple hours. And it's all technical. If you become a day trader, that's really the only way to do it. You never want to buy a stock, especially for a short-term move where it's like, oh, well, I think this move is going to occur because my gut is telling me. Longer term, if it's like AI technology or something like that, you may be right, and you probably will be. But on short-term trades, it's got to be technical. So you look at things like some of the biggest levels we look for is a stock's falling sharply. We look for a gap fill. So just to quickly go over that, so let me just show you guys on this chart what a gap fill would be. So on Bitcoin, if you want to play a quick trade, this would be a gap fill here. And basically gaps are created when you have a price that closes one day and opens up the next and then rallies higher. So when price basically gets back to that and fills that exact price from that close, that would be known as a gap fill. and it's generally in the technical world a level that should see a short-term bounce. Now, it's not something you want to stick around for necessarily, but on a short-term basis, absolutely. Other things you could look for would be moving averages. So if something falls to a 200 moving average or a 50 moving average or a 20 moving average, that would be a great one as well. Also, trend lines are a great way to look in terms of trend line support if something falls and hits a trend line. But those are really the technical places you're going to see bounces. Part of it is emotion, right? So people are seeing these levels and they're all buying together, which creates basically, it fulfills the prophecy of a bounce. But it's also that these computer programs that these institutions spend billions on, they're also programmed to find these levels. And so if you can get in right as they're hitting, as the panic is setting in, you want to buy as the panic is setting in, flushing it into that level, and then buy it. You're going to buy it at the scariest time. But in general, if you trust the levels, and after doing thousands and thousands of trades I do, you should more often than not get a bounce there.
We were going to wrap this up by 5 o'clock. It's 5 o'clock now, but I still see a lot of questions coming in. So due to popular demand, we're going to extend this by a few more minutes. Guys, if you have questions, now is your last chance. I've got a few interesting ones coming in for you. So going back to your SPY call, it says here you said you're short the QQQ spider as they go higher. Are you just adding to your short right now? And then second part to that question, do you have a stop loss?
Yeah. So in general, you always want to have an exit strategy. That's number one. Now, just like I mentioned earlier with various trades like in gold where I'm slowly accumulating, that's exactly what I'm doing here. It's almost impossible, especially in volume this light, to know exactly where the market will top out. I can pick a general range, and generally I'll hit it with cycle analysis and different things like that. But I never trust myself to make the exact call at the exact price. So what I'm doing here, for instance, just last week, I picked up more QID. And I think that was Monday of this week, I picked up more QID, which is a short ETF on the QQQ. And I'm looking to do the same in terms of the S&P and a few other things. So I'm slowly accumulating. Sometimes I'll get in with a very small position and I'll make money on it. And I'll say, oh, darn, I wish I went bigger. But in general, it saves me. And as a trader, you have to remember, it's not about how many wins you have. It's how few losses you can have. So if you can put your entry price in better position by slowly accumulating, to me, that's always better. It always saves you stress and gets you in a better position with a better average. So long story short, I am looking to add. At some point, if it got away from me significantly, then I would at that point have to say, okay, we need to move on at this juncture.
Okay, Blackstone Plainview. Does Gareth trade patterns or also MACD and RSI? So basically, do you use other indicators besides
I do use some other ones, the MACD and the RSI. They're just helping hands, though. So, for instance, if I get a good setup on a technical basis, let's say on a short, if I bring up the RSI, I'd love to see that matching my thought process that it's overbought. If it's at 80 or 85, then it's like, okay, well, this should be a really good trade. It's so overbought in that situation, plus the technicals. But the technicals are always number one. And in general, especially when you're swing trading, you don't just want one technical signal. Like, I just don't want to say, oh, the stock's hitting the 20 MA, I'm going to buy it. I want to say, oh, it's hitting the 20 moving average. It's also hitting a gap fill at the same price or a trend line. The more factors you can put behind your thesis for why you want to do something, the more that rate of the probability of success goes up. So let's just say you have one factor, maybe that's 60-40. So 60% chance of winning, 40 of losing. When you get two factors, it probably jumps close to 80%. And again, you always want to be the casino, right? You want to be the house. You want to have the odds in your favor. I'm not right all the time. In fact, plenty of times I'm wrong. But in the master scheme of things, when you do 1,000 trades, can you win on 800 of them? And that's the key.
Michael L., I got to shift gears for just a sec here. Michael L. in the comments really wants to know about Cardano. Do you have any thoughts on Cardano?
I honestly haven't looked at the chart in the last week or so I wouldn't want to go out on a limb and just give wrong information at this point.
Okay. All right. I'll take one more question. This is, okay, so life advice. This is all they wrote. Life advice, question mark.
Wait, say that again? What was it?
Life advice.
Life
Gareth.
advice.
They want life advice.
Man. All right. I definitely have some, especially now that I have kids. I feel like you get more life advice and perspective when you have kids. Number one, patience and discipline, and don't get over emotional, right? So with my kids, when they react, I try to just keep a standard level keel of my emotion and just say, hey, listen, these are kids. You kind of want to remember that. And when it comes to life advice, just stay humble. Remember that the markets can do anything they want at any time, no matter how much you think the markets should do something. They won't necessarily do it, which is why I've adjusted from buying my all-ins right away to kind of inching into positions. And it's really that maturity of a trader that you'll start to see and be more careful, right? It's in my head, I don't say I want to make $1 million today. I say, let me just put one piece of that puzzle in line so that I can, in a year or in 2 years or in 5 years, continue to make profits. And that's the beautiful thing, right? So, I always tell traders, if you have $25,000 or $30,000 to day trade, you should be able to generate $3,000 to $5,000 a month day trading off of that if you do it well. On a monthly basis, that doesn't make you a millionaire, but if you do that consistently over the course of time, it certainly will. And that's the key. Just be humble and just remember, play it safe. Safer is better. I've lost my money many times in my early career where I blew up my account or almost did. And if I could go back and learn my lessons that I know now, then I would be far richer at this point.
Well, I think you're doing pretty well already, Gareth. But yes, we could all be far richer if we hadn't made some of the mistakes. Can you tell us about some of these mistakes that you've made? Share with us just a few examples.
Yeah, absolutely. So, I mean, there was the time where there was a stock that was down on earnings, and this was relatively early in my career, and I started to buy it thinking it would bounce. It didn't bounce. I just kept on buying more and more to the point where, I literally lost over 70K on that trade in an intraday basis, and I at that point my account was only maybe $100,000. So it was a huge hit. I still remember, getting up from the computer that day and just being in kind of this daze, like, is this real life? Is this a dream? Those type of situations happen, and luckily I learned from it, and I haven't made those same mistakes again. Other times, I still remember in the early 2000s trying to short Taser, and these are all coming from the same place, is that there's a certain point you have to just step back. And part of that is share size, go lighter in share size to make your emotions more in check, but also just be aware that stocks can do anything they want at any time.
Well, how do you check emotions? Is that even something that is possible, or do you overcome them with stop losses and whatnot? Because I'll tell you, when I was much younger and I was day trading with my phone for fun, whenever I take a hit, logic tells me I should just sell it off, but my ego comes in. It kicks in, and I tell myself, look, I should not do this, but I'm averaging down anyway. And then I press the buy button, and of course I lose more. So
right.
How do you check
the
that?
Key is, and the key is with that is that you want to ask yourself, how are you feeling, right? So anytime someone comes to me and they're like, oh man, I'm freaking out in this trade, what it tells me is that the share size is too big that they did. So you have to, before I do any trade, and this, you can ask traders in the live day trading room or anywhere, I always say to myself, what's my maximum share size that I want to hold? All right, so it might be 5,000 shares, 10,000 shares, or 1,000 shares, depending on the stock. What I'll do then is I'll say, okay, at this technical level, I'm going to buy a 1/4 share size of that. So going into a trade, it's always better to know your maximum and then stick to that. And that'll keep your emotions in check because you're doing small enough share size. The only time emotions get out of whack is when you have too many shares, and then every uptick or downtick in a stock is very, very painful, right?
Okay.
So always remember that is that, the first thing you do is figure out ahead of a trade, what's my total position going to be, and then start buying in increments of that, and never try to never go above that amount.
Gareth, we have to wrap up now. Where can people find more about your work and learn more from you?
I would say follow me on Twitter. That's the best place. I hope that at some point everyone takes a shot and joins my services that I offer. But I always like to let people follow me, and then they get free information initially, and they can kind of check me out. Make me prove myself with some of the calls on Twitter first, and then if you like that, come to inthemoneystocks.com. My Twitter handle is @Gareth Soloway, so at my first name and last name. Super easy to find me, and I hope that I can continue to help people learn and master the markets and make money.
Okay. And of course, we will have more in our Kitco Insights interactive series, so stay tuned to kitco.com for more information and our announcements of our upcoming events. Of course, follow me on Twitter as well, David Lin _TV. Submit your questions to me and topics you'd like to cover for our next event series, or event rather. And of course, we'll address that. Thank you so much for coming on the show today, Gareth. It's an absolute pleasure with you as always, and I look forward to doing more of these with you in the future. Thank you.
Yeah, absolutely. Thank you for having me. And I love the live questions and hearing from people and getting to those type of things. That's great.
Okay. And to those watching right now, all 3.5 thousand of you, thank you so much for tuning in and submitting your questions. It's a shame we couldn't get through all of them, but we got through as many as we can. There's always next time. Tune in to Kitco.com for the next. I'm David Lin. Stay tuned.